Welcome to The Tax Factor, the top 20 business and investment podcast from Blick Rothenberg, the tax, accounting and business advisory firm, Election 24, with Heather Self and Neil Insull.
Welcome to The Tax Factor, the top 20 business and investment podcast which brings you all the latest news and updates in the world of tax and provides analysis of what it might mean for you or your business. I'm Heather Self.
And I'm Neil Insull.
Neil, welcome back to The Tax Factor. I'm looking forward to hearing some of your thoughts on what's in the manifestos and what isn't.
It's nice to be back.
We're entering the final week of the election campaign as we take one last spin round Covent Garden and Holborn in our battle bus before it gets converted into a camper van for our summer holidays. Neil did offer to sing the Cliff Richard song, but I declined that kind offer.
Thank you.
This week, we're going to step back from the detailed manifestos, take a look at the business perspective. What are the business tax measures we're likely to see or that business would like to see? As far as the polls go, there's no sign of Labour losing support, and so the most likely outcome, although it's never certain, is a Labour government with a solid majority. Economists such as Paul Johnson of the IFS have pointed out that the big challenge for whoever gets elected is how they're going to fund their spending commitments without significantly raising taxes or borrowing more. It's not going to be an easy tightrope to walk. Turning to one of the specific promises in the Labour manifesto, they've said they'll raise about £5 billion from reducing tax avoidance, and that's a pretty similar sum to what the Conservatives and the Liberal Democrats have said. But when you look at Labour's more detailed policy document, it's much more about improving compliance and investing in technology than specifically about avoidance. Neil, I think you've had a look at the tax gap figures. How much actually relates to avoidance?
It makes very interesting reading. Just to give some background as to what the tax gap actually means. The tax gap is essentially the difference between what is being collected and what is theoretically could be collected through the tax rules. The tax gap is often interpreted as a failure by people to pay the right amount of tax through avoidance, but it goes much further than that. There's a whole load of reasons why this tax gap arises. And just to put it into more recent context, the reason this has hit the news recently is that the latest published figures suggest that the tax gap is at an all-time high in terms of cash terms. So 40 billion, which is a significant figure in itself, but actually only represents less than 5% of the overall tax liabilities that the government could take. And it's that figure actually that has fallen over the years. So in fact, the tax gap has actually reduced since the figures were first collected. And you go back to about 2005 when the tax gap was first formally calculated under the current ways. But when we look at this 40 billion, it does make interesting reading because as I say, it's broken down into all sorts of subparts. Some of it relates to avoidance, as I say, some of it relates to evasion. Some of it, and quite a lot of it, relates just people making mistakes and people simply not understanding what the right amount of tax is to pay. And that, on a personal basis or individual personal tax basis, amounts to almost half of that. But there's another really interesting statistic that's come up recently, and one that a lot of people have focused on, and Dan Needle has done some analysis of this, is that 25 billion or 24 billion, I think is the exact figure that's coming through from the government stats, is down to a tax gap arising from small businesses. And this is businesses that have turnover of less than 10 million and fewer than 20 employees. So quite small businesses in their own right. A lot of small businesses exist in this country, of course, and actually their tax take as a proportion of the overall tax take for larger businesses is relatively a small part of that. But what's happening clearly over the last few years from the stats that have been prepared is that tax gap has risen remarkably quickly to a level which I don't think anybody expected. And when you look at the reasons why small businesses may not be paying the right amount of taxes, it could be down to a number of different reasons. I don't think anyone has really formulated quite what is happening in that arena, but people can certainly look at the complexity of the tax system and the fact that actually small businesses aren't intentionally trying to evade or even avoid tax. what's happening is that they don't actually understand what the tax rules say they should be paying. And a lot of this escapes, obviously, the revenue's investigations. I think it's down to complexity of tax system. It's probably down to the fact that the assistance that HMRC are giving to small businesses at the moment is not good enough. I think we've seen clearly a deterioration in customer service, not only for individuals, but also for small businesses. So I think there are some important issues that are being messaged here from that tax gap, which from my understanding from reading Labour's manifesto, and in particular their view of how they look at the tax gap, is that they can do quite a lot to help actually reduce that tax gap going forward, particularly for small businesses.
I think it's really good that one thing Labour have said is that they will invest more in HMRC to help improve compliance and also invest in digital technology. I'm sure we've talked about making tax digital before. It's a good idea in theory, but it's imposing some significant burdens on business. I was at a business tax conference last week, and it was quite interesting to hear what business are expecting and hoping for from the new government. And the CBI, about a year or so ago, put out their proposed business tax roadmap for the new government, whoever that might be. Now, we've had business tax roadmaps since about 2010. It was one of the most useful things, I think, that was done on tax early in the Conservative or Coalition Parliament. I actually first recommended them to the incoming Labour government in 1997. So if Labour produce one this time, they'll finally have listened to me, which will be very nice. But what a business tax roadmap does is give businesses some certainty around investment decisions. Business quite often doesn't mind too much what the tax rate is. I was listening to a senior tax director last week who said, frankly, they weren't too worried whether the rate was 19% or 25%, so long as they knew what it was going to be and could plan accordingly. Now, that's not an invitation to anybody to put the rate up, but I think it is saying that stability and certainty are really important. Simplification is great, but having worked for HMRC at one point, it's really difficult to do, because as soon as you suggest taking away any sort of anti-avoidance measure or any complexity, the revenue will say, but what about this might happen? So, for example, the rules for employee expenses and what's deductible and what has to be treated as taxable for employees are very complicated. You could simplify it significantly by saying, provided a business has a reasonable expenses policy, question what's reasonable, and only pays expenses which properly relate to the business, you shouldn't have to do a huge amount more detail. But that is not going to be an easy thing for any government to do. It's going to take real drive and determination to do that. Looking a bit more at what the CBI have said, they made some interesting comments about the challenges of moving to net zero. At the moment, the government does collect quite a lot from taxes such as fuel duty, which are frankly going to disappear if we do get to all electric cars. So what are their plans for taxation as we change significantly the way that we think about the environment? Already mentioned digitisation as a big challenge, and it would be good if you look at some of the things that are done on government websites. I applied for a new passport recently, and actually the system is miles better than it was a few years ago. So there are times when government can do digital things quite well. And the final area that I do hope an incoming government will look at is the taxation of labour. The Labour Party have said they're going to look at rights for employees and workers. If they could also align that with tax and make it so that people don't choose a particular business structure for tax reasons, that would be good. They should tax businesses, they should tax employees, they should tax the self-employed, but they should do it in a way that doesn't distort the business decisions. I could ramble on about this for quite a long time. I've forgotten what else we're going to talk about. Oh, I was going to ask you whether there were any other rumours that you'd heard, Neil, and what you thought about them. I've just had the leaflet from my Conservative Party candidate, and it's full for all sorts of dire warnings of things that Labour will do if they get in.
Well, what are they saying? I mean, I guess they're hitting on things like capital gains tax as probably the area where they're most likely to change the rules.
Their messaging to the voters is much simpler. Do we know what Keir Starmer would do? He's had 4 years to tell you his plan, but he hasn't told you anything. The only thing we know is that Starmer wants to raise taxes. He might apply a retirement tax, applying tax to state pensions for the first time in history. Now, that's a bit rich because, firstly, a number of people on old-style state pensions already pay tax. And secondly, the only reason people on the basic state pension are going to pay tax is because the Conservatives have frozen the tax allowances.
Well, I think there's quite a lot of people who are guessing how taxes actually work when it comes to the scaremongering. There is a case case for saying that some of the remarks in the manifesto, in the Labour manifesto, are a little bit woolly. I mean, they do say they don't want to increase or don't intend to increase the rates of tax, income tax and corporation tax. And as we know, there's a lot of stealth taxes that have been employed by the government over the last few years, including the fact that they've frozen thresholds. I think the other thing that the Labour manifesto says is no rises for working people, and that clearly opens up the opportunity for them to think about how they're going to tax non-working people, whoever those people might be. Presumably the wealthy who don't have to work for the living, but I'm guessing.
I think Keir Starmer's definition of working people is people who work for a living and don't have much in the way of savings to meet unexpected expenses.
Yeah, I think we know what he means, but it's a slightly woolly expression.
I think they're being deliberately woolly at the moment. I think they expect to get elected and they're being very careful not to give hostages to fortune.
I agree.
Apart from the absolutely enormous hostage of saying they won't raise the rates of income tax, VAT and national insurance. That really ties their hands behind their back.
Totally ties their hands and offers no opportunities for significant reform as well to taxes. I think the other thing that we got to bear in mind is that there's already some baked-in tax rises that won't change for the next 3 years anyway, because the government or the Labour Party is committed essentially to continuing with the same thresholds for the next few years. So I think people will feel the pain, and I think there will be some tax rises, but they're the legacy essentially of the government that's just been. So I think it's a difficult time for Starmer to actually basically quell the rumours, and also I think the first few months, if not the first few years, will be very difficult for the new government actually in terms of actually confirming or trying to persuade people that they're doing the right thing in terms of tax policy, because I think that it is going to be incredibly difficult. The other thing to bear in mind is that over the last 5 or so years, if not longer, we've had significant changes in the geopolitical environment and also pandemic. So we've been hit by the pandemic, we've been hit by the Ukraine war, price rises, the leaving from Brexit, which obviously was a political idea. All of those have had a significant impact on growth, on tax policy, and also on future tax policy as we try to catch up and actually try to increase growth. Those things may return to us, but I don't think we're going to see the end of instability worldwide in terms of the politics and also in terms of ambitions by China and Russia. I think those will continue, and that will definitely have an impact on the way that the government will perform and growth increases in the UK or not.
I think we're in agreement, Neil, that whoever gets elected, and it looks likely to be Starmer at this stage, they're going to have some significant challenges ahead. Can we finish on a lighter note? Did you find anything amusing we could end with? Thought we could chat about, perhaps we could have a rise in the betting levy to stop people taking bets on the election.
Or maybe people just bet fairly, why not? And actually, you can have 80-1 at the moment on the Conservatives having more seats than any other party after the general election. I mean, 80-1, not bad.
If you want to spend your money on that, Neil, you're very welcome. I'll finish just by, I've been reading a lot of political emails about what's going to happen in various seats. And the one I liked most was a description of Nadeem Zahawi as being overly tax efficient. I thought that's a very good description of one of the candidates anyway.
The Tax Factor, Election 24.
Well, I think that's all we've got time for today. So thank you very much to Neil for joining me on this week's Tax Factor.
You can keep track of our election coverage and insights on our website. We've got a breakdown of all the manifesto's tax promises and some great podcasts, including our Tax Factor election specials and Nimesh Shah talking to Claire Barrett on the FT Money Clinic. Heather, I understand you are back with a special edition of the Tax Factor, recorded and released on the morning after Election Day next week.
That's right, Neil. I'll be joined by Blick Rothenberg CEO Nimesh Shah. And as we finally know the outcome of the election, we'll look at what we think the first few months will have in store. It's actually going to be our last episode of this series. We could never have dreamed of such a finale a few weeks ago. It's not been this exciting since the quasi-Kwarteng car crash budget. And a final plea, whatever your politics, do make sure you use your vote next Thursday. So until next week, it's goodbye from me, Heather Self.
And goodbye from me, Neil Insull. Thank you for listening and have a great weekend.
That's the Tax Factor. We'd like to thank you for making us one of the UK's top 20 podcasts. Find all our previous episodes wherever you get your podcasts. And join us again next time on the Tax Factor.